Alright dear friends, let's first understand what MACD is and its purpose. The MACD indicator, or more accurately the MACD oscillator, stands for Moving Average Convergence Divergence. This oscillator was created by a person named Gerald Appel. Despite not having a particularly complex formula for its calculations, it has become one of the most popular tools in technical analysis. It helps us easily determine the strength, direction, and momentum of a trend. In fact, by developing this indicator, Mr. Gerald has done a huge favor for all traders. In essence, most of this indicator's calculations are done based on the closing price of the candle, which I will break down for you in the future and explain its calculation formula. This MACD indicator comes in two versions, old and new, or classic and standard advanced. I will show you both types and explain the differences, even though their functionality is quite similar. They only differ in appearance, and I will explain them one by one so you become familiar with both types. Here, you can see that I have opened a chart and placed two MACDs on it. If you're using MetaTrader, I am using MetaTrader 5, though 4 and 5 don't have much difference. Here you can see that we only have one type of MACD by default on MetaTrader, which is the advanced or new version, which is the one on top. If you want the MACD that has two lines, which is actually the classic or old one, you need to download it separately. You can easily find it with a quick search, and as I explained before, you can easily add it to your MetaTrader. But for those using TradingView, I think it's the opposite. There, the MACD provided is the bottom one, and they don't have the top one, which needs to be added separately. Now I'll explain this on MetaTrader. As you can see, I had previously downloaded this classic MACD here. We have the MACD, and I want to explain its components one by one, what they do, and get familiar with each part. Let's start with the classic or old MACD, which is the one at the bottom, meaning this part of our chart. This is the classic MACD, as indicated here. The name itself is self-explanatory. This one here is our new MACD. Alright dear friends, as you can see, the classic MACD has a histogram, which refers to these gray bars that go up and down. These vertical bars are called the histogram. And it also has two lines. One is blue and the other is red. The blue line is called the MACD line, and the red one is called the signal line. Now, let's talk about the new MACD. As you can see, it also has a histogram, but I've placed both of them on the same chart to show you the differences side by side. The histogram is a bit different here. You can see that it's larger compared to the other one, and its lines are slightly different from the lower histogram, which I'll explain why shortly. Instead of two lines, we only see a red line here, which is the signal line. If you closely observe the movement of the red line here and compare it to the one above, you can see that, for example, it moves in a similar way here, and we see the same pattern here as well. It's the exact same line, the same signal line that we have in both. So what happened in the new MACD? You notice that the blue MACD line is missing here, but in reality it hasn't disappeared. So what happened? It transformed. Into what? It has been transformed into the histogram itself. What does that mean? Let me show you now. For example, I'll pick a spot where it's more noticeable. Look, forget about the red line for a moment and just focus on the blue line. Our blue line moves like this here, then goes down, and then we see it moving up again with an upward motion and reacting like this. Now, if we look at the new MACD and consider just the histogram, and if I try to draw a line along the edges of the histogram, though I'll try to do it as accurately as possible, but if it's not very precise, please forgive me. You'll see that the trend of the histogram exactly mirrors that of the blue MACD line. Now look at our blue line here. It goes down from this point and then it moves up in a pattern identical to this one. This part I didn't draw very well. It goes up again, reacts like this, moves to the right, and then rises again to form a curve here. The same way, another peak forms here, and then it comes back down and continues its trend. So our blue MACD line in the classic or old MACD oscillator has been transformed into this histogram in the new or advanced version. They are the same thing, folks, and there's no difference at all. Now let's see how the calculations work. In reality, it's not really essential to learn the calculation method for every indicator, but I'm explaining it here just for completeness, and it's good to know because understanding it doesn't hurt. First, let's talk about the MACD line, which we just discussed. Here it's represented as the blue line, and in the new version it's shown as the histogram. So, what is this MACD line and how is it formed, and what calculations lead to it? It's formed by taking the average of the price from 26 periods ago, 26 candles, and also the average of the price from 12 periods ago, 12 candles, and then subtracting the two values to get the difference. This difference is then displayed to us as this line or histogram. So what is our MACD line? It's the difference between the averages of the prices from 26 and 12 periods ago. It takes the average price of 26 candles ago and the average of 12 candles ago and subtracts the two. In simple terms, that's how it's calculated. Now, how is the signal line formed? The red line that we see on both versions, which looks the same on both. This signal line takes the average of the last 9 periods of the MACD line. It takes the average of the MACD line over the last 9 candles or 9 periods and shows it to us as this red line, which we call the signal line. Now, what is the histogram? These vertical bars that move up and down, which are also called bar charts or histograms. This histogram, these bar lines that we see on both versions, moving up and down, if we consider the middle of the oscillator as a reference point, you'll notice it's marked 0 here. As you can see on both versions, the histogram starts from 0 and then moves up and down. It shows us the difference between these two lines, meaning the difference between the signal line and the MACD line. That's exactly why when these two lines intersect, meaning they cross each other, the histogram reaches 0. Look here, it's quite clear. You can see that these two lines have reached a point where they've almost overlapped, and we see that at this point the histogram has exactly reached 0. Similarly, in other places, wherever these two lines intersect, we see that the histogram hits 0 there as well. You can see that this same event happened right here. But this is how it works in the classic MACD. In the old MACD, the two lines are present, and the difference between them is shown as the histogram. So as I mentioned earlier, wherever they meet, it reaches 0 because there is no difference between them when they are on top of each other. Where the lines start to move apart, the histogram goes up, indicating an upward trend, and when it goes below 0, it indicates a downward trend. Now, in the new MACD, as I explained, our MACD line has turned into the histogram itself and moves exactly the same way. So these two have merged together, but their functionality remains unchanged. Look here. Many people use the MACD crossovers as signals. For example, when the MACD line crosses the signal line upwards, they interpret it as a potential upward trend. As you can see here, I've illustrated it clearly. This exact crossover that happened here is also visible at this point. And we can see that the price managed to rise afterward. So in reality, their functionalities aren't different. It's just that their visual representation has changed slightly. By working with them a bit, you'll get a good grasp of what their differences are and how they work. Alright friends, I've explained the different parts of the MACD to you, and we've become familiar with it. What use does this MACD have, and where can we use it? One of the best uses of this oscillator is in identifying divergences. Friends, we can use this oscillator to identify divergences very well. I have already made a video about divergences before, and if you haven't seen it, I highly recommend you watch it. I've explained the different types of divergences in that video in detail. I'll link the video at the top of the screen. If you haven't watched it, make sure to check it out to understand the overall concept of divergence and its various types. For example, here we have a divergence. If I want to briefly explain it, divergences can be identified using various oscillators like MACD, CCI, RSI, and other oscillators. With their help, we can spot divergences. This means that on our price chart, for example here, we see a low point. Look here, let me explain it. We see another low here, and from this point to this point, we observe a downward trend. But if we look at the same spot on the oscillator, let me draw it here so you can better understand what I mean. You'll see this point and this point on the classic MACD. It's exactly the opposite movement. On the candles, we have a downward trend, but on our oscillator we see an upward trend. This is the concept of divergence, which has various types. I won't go into too much detail about it now since I've already explained it in the previous videos. Make sure to watch those videos to understand the concept of each type of divergence and what it implies. After identifying such an event, we can anticipate what might happen to the trend, and it's crucial to get familiar with its various forms. One of the best oscillators that can help us detect divergences is this MACD. Look here, for example. A lower low is forming on the price chart and our candles, but here it's suddenly showing us a higher high on the oscillator. It's the same here. If we want to draw it, let me clear this up and draw it better. If we consider this point here when working with the classic MACD, we need to focus on the blue line. Look, from this point, we see it forming like this. Similarly, on the other one, we see the same behavior. Look, we can draw this trend from the histogram, which gives us a clearer and more accurate view. We see that both are showing an upward trend on the oscillators, but on the candles we have a downward trend. So, as you can see, divergences on the MACD are easily identifiable and observable. Alright, another use of this MACD oscillator is that whenever a crossover occurs, like in this example, it can provide us with a buy or sell signal. However, let me point out that you shouldn't rely on it solely or assume that every time you see such a crossover, you can confidently place a trade. Typically, MACD works best when combined with another indicator or oscillator. It's great for confirmations and can increase your confidence in your analysis. Even if you primarily use price action and don't rely much on indicators, MACD can still serve as an additional confirmation tool and help support your analysis. As you can see here, the MACD line has crossed above the signal line. This histogram, as we mentioned earlier, represents the MACD line itself, which has been transformed into a histogram. Here, we see the same thing happening, and we can observe that the trend has turned upward. Likewise, we see the opposite happening here, where there was a downward crossover. The histogram crossed below, and we see that this resulted in a downward trend, even though it was short-term. So in conclusion, MACD crossovers can be a helpful tool for identifying potential buy and sell signals, especially when combined with other indicators or analysis methods. Alright, that was a brief yet comprehensive review of the MACD oscillator. I tried to cover everything about it as completely and thoroughly as I could, including its components, calculation formula, and applications, as well as where we can use it. However, if we want to learn a trading strategy using MACD together, I will definitely do that in the future. but not just a strategy that only relies on MACD. I will certainly try to incorporate MACD as a confirmation tool in a trading strategy, and I'll definitely share a video with you in the future on how to use MACD in your trading strategies and decision-making processes. To easily and freely register with the Quotex broker, click on the link in the video description. Dear friends, to make sure you don't miss any of our videos, please subscribe to the BS Academy channel. Also, activate the notification bell so that you are informed as soon as we publish new videos. Thank you for your support.